Good afternoon, everyone, and welcome to today's webinar. We've still got a few people to log on, but as time's fairly precious, I thought we'd get underway. We really appreciate the time you've taken to participate in our webinar today, and we hope you find it useful. My name is Jenny Ann Hall, and I'm Mecardo's Business Development Manager. I'll be facilitating the webinar today. Before we get started, I need to acknowledge, and I'd like to acknowledge, the support of the state grower networks, Leading Sheep in Queensland, Sheep Connect in New South Wales, Best Wool, Best Lamb in Victoria, Sheep Connect in Tasmania and in South Australia, and the Sheep's Back in WA. These AWI-funded state grower networks are fundamental to the spread of new ideas, continuing education and adoption of best practice among sheep producers around Australia. If you're interested in finding out more about the grower network in your state, we've provided the contact details for the coordinators on your screen. Now, for those of you who don't know, Mecardo is an online service providing analysis and commentary for livestock, wool and grain markets. There's an enormous amount of fantastic market information provided by MLA and AWI and others. With Mecardo, we value add this information by filtering what's important, filtering out the noise and identifying what's important, analysing it and delivering what's relevant to our subscribers. In particular, we focus on the market outlook and what the analysis means for you. We rely heavily on Meat and Livestock information, Meat and Livestock Australia information to be able to provide what we do. And with that in mind, we're very pleased to have Tim McRae, MLA's Chief Economist, here today to present the key findings of MLA's mid-year update of its 5-year sheep meat industry projections. So thank you, Tim. Following Tim, Robert Herrmann will then take a look at what these projections might likely mean for the market outlook and price. Rob is Managing Director of Ag Concepts Unlimited, which is an independent risk advisory and market information service, and Mecardo is a product of Ag Concepts. Now, before we get going, I just have some brief housekeeping to outline. We'll have 15 minutes question time at the end. Because of the large number of participants on the webinar, your phone has been muted to make sure the quality of the audio remains high. You can use the chat box at the bottom left of your screen at any time during the webinar to put forward questions. And I'll collate these as we go, and I'll direct them to Tim and Rob at the end of the session. Now, just to make sure you can ask questions if you need to, could I please ask you all just to go to the chat box at the bottom left of your screen next to the cog and type in your postcode. Okay, so I can see them coming through. That's terrific. Thank you very much. You can also use this chat section if you have any issues with accessing the webinar. Your chats will only be seen by the presenters and me and not the other participants. There'll be a short 1 to 2 minute survey at the end of the webinar, and we'd really appreciate you remaining on the line for this. It's pretty simple because your feedback helps us to continue to improve Mecardo's webinar service. If you have any technical issues, you can contact Redback Conferencing directly at any time by pressing *0 on your phone, and they'll be able to assist. So without any further delay, I'll hand over to Tim. Thanks, Tim.
Thanks, Jenny Ann. I'm assuming I can be heard and everything else, so I'll power on. And again, it's nice to be involved with Mecardo to get these projections out there, but also hear the more market-focused outlook on where these are heading from Rob later in the day. Look, we do our sheep projections twice a year. Excuse me. We do our initial one in January, February, and we do a bigger mid-year update in the middle of the year because that's a very good time to be forecasting for the sheep industry. There's two main ways that feed into our sheep projections. The first one is we have an extensive model, in-house model that plugs all the numbers and spits us out some end results. But the second way we do it, in a way that we find to be very useful, is we have a land forecasting committee that we put our numbers through. I don't know if anyone online is involved in it, but we also do a very large land survey which goes out to over 13,000 industry participants. And for this one we got back around 2,500 respondents. So we use industry results and anecdotal evidence from industry to calibrate our model results to see where the industry is going. I might need to speak a little louder. So starting off, and I'm going to start with a few assumptions, because when you do these projections each year, you've got to have some assumptions. But the main one is that the Australian flock's declined for the past 2 years on the basis of unexpectedly high sheep slaughter. So as at the 30th of June, a month ago, we have the Australian sheep flock at 72.2 million head. That's down 2.7% on the previous year, and we peaked at about 74.7, 75 million head in mid-2013. So look, still historically a very small sheep flock, but as you'll see as I progress through, the productivity of that sheep flock has increased significantly on the focus of land. The other big assumption we have to do is what seasonal conditions will do for the rest of the year. The catchword is El Nino. Fortunate to see that it's been revised down from what was a 70% likelihood to a 50% likelihood only recently. But, you know, and talking to a lot of producers, and we had about 25 producers involved in our meeting in Melbourne 2 weeks ago, it was that autumn and winter in southern Australia had been very good. That's right from Western Australia through South Australia, Victoria and New South Wales. And it was really only Western and Northern New South Wales and Queensland that were doing it very tough. But as one producer said to me, if you didn't have a forecast for an El Nino at the end of the year, we'd be shaping up to have one of our best years on record. So that was taken into consideration with our numbers, and we think that 14 will end up being a year at best that could be described as average, given that El Nino forecast is still quite strong. The other results that we take into consideration is what our lamb survey results were. Now, 67% of the respondents reported, 55% of respondents reported that seasonal conditions were better than last year. Now, for a lot of places that might be too hard, but you know, that was significantly better than last year. And we ranged from comments everywhere from producers in parts of South Australia saying it was too wet. That also went through parts of Victoria, to parts of southern New South Wales saying they're worried about their stocking levels to make sure they've got enough to eat the feed coming through in spring. So you know, the optimism was there on what they had received, but certainly there was some pessimism there about what the season could bring in the second half of the year. The key numbers that we got out of it also was that the lambs on hand, as at the 30th of June, were down 6% on the same time last year, and the expected lamb sales would be down 5% for the following 4 months. So that's from July to October this year. Now, those numbers lined up very well and met the expectations of both the committee that we bounced them off and producers that I also bounced numbers off. But I should point out that even that 5 and 6% fall is from last year's numbers, which were exceptionally high. Remember, 2013 was a record lamb slaughter year of 21.9 million head. So again, tell me what the next 4 months will be like, and I'll tell you what the market's going to do. Now, I think it's still, this is the revised El Nino forecast, and we're looking at certainly, you know, key sheep areas there of South Australia, Victoria, New South Wales, having a very much below average chance, or lower chance of exceeding the median rainfall through the spring months. Now, it's hard to reconcile that given the momentum that a lot of areas will be moving with, given how good autumn and winter have been. And it seems to be the case that the bomb is weakening its outlook here on the El Nino. So hopefully that continues. We end up having what is an average spring, I think, for a lot of producers in southern Australia would be very well received. For those in the northern New South Wales producers through to New England and western New South Wales, I think this would have very wouldn't be that welcome, and those drought conditions look like persisting for a long time yet. Really looking for some of those big late spring rains to come through, maybe with the northern wet season. But you know, certainly for the bulk of the ewe flock, the bulk of the sheep flock, and where the lambs are, you know, looking at possibly a drier spring, but still things were forecast to be much worse, and at least we've got the momentum of the recent autumn and winter coming into it. So, excuse me, the Australian sheep flock, we expect it to slowly rebuild. One of the key results we keep getting out of our survey is that there is an intention to rebuild, but it's not a very strong intention. A lot of producers saying they are comfortable with the sheep, with their ewe flock at the moment, they are comfortable with the returns and the effort that they have to put in to get those returns, and that any rebuilding will be slow. So if we're currently at about 72 million head, we see the flock rebuilding up to about 77 million head by 2020. So, you know, that's only 5 million head over a 5-year period. We have seen periods in the past where rebuilding can be much quicker than that. But just from what we're picking up, combination of pressure from cropping regions in the south, just the average age of producers, the effort involved, the feedback we get there is that if there is rebuilding, it will be slow, and it will lead to about 77 million head over the next 5 years. Again, this next one is the results from our lamb survey, and just shows the difference between those producers who intend to increase their ewe flock, decrease their ewe flock, and maintain. And the key point I take out of this again, and I reiterated that a lot of producers seem quite happy to maintain their ewe flock where it is. With, if there is a certain amount who want to increase, and that results in only a mild rise over those forward years. It's also interesting to see, and maybe there'll be some questions on this at the end, that one of the key feedbacks we got was that given how timely the break was this year through southern Australia, that a lot of producers chose to sell some of their breeding ewes. And we did see a spike in sheep slaughter in the first quarter of this year. And the feedback from that was that it wasn't a concern about the confidence of the sheep or lamb market, it was more that the enthusiasm, if you like, to expand cropping enterprises on the back of finally a break coming when it was meant to come. On the lamb slaughter side of things, as I said earlier, our survey results and feedback from industry tell us that we're looking at about a 5 to 6% fall in the volume of lambs to come into the market for the second half of the year. That'll leave us with an annual slaughter for 2014 at about 21.2 million head. Now again, if you can see on the chart in front of you, 2014, that's still the second highest year on record. And I'll break this down a bit further to just also give you hopefully some confidence behind these prices that we've been seeing lately, that the demand will be there to absorb those lambs. We'll see some further falls in lamb slaughter in the coming years, particularly in 2015. It's still historically some pretty good numbers. And again, I think that's reflective of an industry that's now adjusting and focusing on producing those lambs from anywhere between what is now a 72 million to a 75 to 77 million head flock. Just when we look at the monthly lamb slaughter, we certainly always see a decline through the winter months, but still it's at historically high levels. And I keep pointing that out because I also want to iterate just how surprising it's been that the prices that we've seen so far in 2014 have been on the back of very high slaughter levels. You could compare that to the cattle industry. I don't want to bring up the cattle industry, but they've had very high slaughter levels too, but the prices haven't responded. So breaking our lamb slaughter forecasts and saleyard prices, and I'll just spend a bit of time on this chart because what I've got here is it's quarterly slaughter volumes, and we put quarterly prices across that for just the average trade lamb price in the eastern states. And the two periods I want you to focus on is the first 6 months of this year, so 2014, so that would be the last blue and the first green bar there, but also have a look back when you saw lamb prices peak in 2011. We've effectively killed 4 million more lambs in the last 12 months than we did in that same period, and prices have reached back up towards those levels to average higher across the 6-month period. So whilst we look back at the highest price period we saw in late 2010, early 2011, where I think the record price was $252 a head, and we saw some 650s in carcass weight prices, it was a spike, if you like, and it was driven by very low slaughter and supply levels. We were in the middle of the 2 wettest years on record, and we saw prices spike because processors were just chasing whatever they could get their hands on. Compare that to the last 6 months where we've seen some historically high slaughter levels. We've still seen lamb prices above $5.50, but it's been sustained, and we've seen that being driven by one, very strong demand from overseas markets, which I'll get onto more. Just looking at the quarterly slaughter numbers going out to the end of 2015, we always see a decline in the third quarter, just where we are at the moment, but we always see a pickup in that fourth quarter, particularly as those new seasons and spring lambs really start to come through in November. But overall, supply numbers will be back slightly, but again, that's back on the highest period for the last 12 months we've seen, but we think the demand will be there to absorb them quite easily. Just quickly on sheep slaughter, sheep slaughter in the last 2 years has been much higher than we expected. pushing up towards 10 million head in 2013, and we think it'll be about 9 million head this year. Last year's big increase was really a culling out, if you like, of those additional ewes that were retained through the very wet years of 10, 11 and 12, and you can see there on the chart just how low those years were. In 14, we think it's been a combination or a continuation of that, but also additional weathers coming into the market on the back of the poorer wool prices. So we think we'll see sheep slaughter over 2015 to 2020, hover around 7 to 8 million head. Now, sheep slaughter is extremely reactive to seasons, so we probably won't see it do that over in real terms. But we don't think we'll see big sheep slaughter numbers again, particularly if this enthusiasm to rebuild continues. Breaking those sheep slaughter prices and saleyard prices down into quarterly again, you can just see there particularly how tight sheep supply was through 10, 11 and 12 and what that did to the prices. And again, we've seen that spike coming in the first half of this year with mutton prices going up over $3.50, and we think those slaughter numbers will remain pretty steady with some seasonal influences through the end of 2015. The other key factor that we spend a lot of time on is looking at what carcass weights are doing. Now, obviously from 2000 to 2011, we saw some significant increases in carcass weights year in, year out. From what we're hearing from both the processors, from the stock they're seeing, but also producers, is that the message has got out that lambs that are too heavy are not necessarily, they're still purchased, but they're not as in high demand as previous years, and we see that carcass weight flattening out around 22 kilograms a head. Interesting to see this year that weights are up slightly on last year, but really nothing notable there. So on one hand, producers are getting much better at finishing lambs to specification, but they're also aware of that price there for lambs that hit the sweet spot between the 20 and 24 kilogram basis. And just finishing up on the slaughter, farm incomes, bringing it back to, we've seen many more lambs killed this year or sold, and we've seen prices up. Farm cash incomes for 13, 14 were up slightly last year, but you can really see that there's been a bit of a straight line through for the last 5 or 6 years. And we look back at years of 2001, 2002, where farm cash incomes for slaughter lamb producers were very high. But again, you've got a 48-cent dollar there, and it should be noted here that this also includes prices for grains as well, the receipt on those farms. So the supply side of things, I think the supply of lambs will still be historically quite strong. They will be tighter than last year, but the good news is, and getting onto it now, I think the demand for lamb globally and in Australia looks very good, and that'll help underpin where prices go. So on the Australian market, there's been a steady decline over the last decade of overall lamb consumption in the Australian market, but that's at the same time of a retail price that has increased significantly. So over the coming years, we think demand for lamb in Australia will remain very strong, again associated with those key times of the year, whether it's Australia Day or through the spring lamb promotions, but really hovering around 200,000 tonnes as a major market. And really facing some competition from exports, but still a market that's extremely valuable. And again, that Australian market has no dollar and has no market access issues. I've just brought up the retail prices that you can see here. And if you remember back to those quarterly prices I was showing you for lamb, and I talked about the lamb price spike that we saw in 2011 on the back of very tight slaughter numbers, and we saw prices up at $6.50. You can see that again reflected here in the retail price for lamb in 2011, where we saw it nearly touched beef, and it got up to around $15 a kilo. Since then, we've seen the retail price of lamb ease back, now back to around $12.50. Combination of additional supplies in the market, but also the major retailers' efforts to maintain lamb consumption and keep it at a price that consumers will continue to go towards. The pressure on retail prices over the next 5 years is expected to return, particularly if the export numbers that we see coming prevail. I think this next chart really does show how successful this lamb industry has been since 1995. Exports have grown from 15% of production, now 55% of production. And we expect that to continue to expand through to 2020. I'll move on to the next one.
because we see markets like the Middle East, it's a massive market now, taking around 60,000 tonnes of Australian lamb this year, and that'll continue to expand. I mean, the Middle East market has many things going for it, but primarily it's a market that knows how to eat sheep meat and lamb. It takes a variety of cuts, but also you don't have a major competitor in that market of pork, which must be acknowledged. You have a look at the US. It's still our single most valuable destination for lamb. It takes the higher valued cuts and the bigger cuts, legs and racks. We had a difficult time there through 2010, 2011. The combination of very tight supplies that we saw, but also the Aussie dollar was high and the price of lamb was high, and that hit consumers there quite hard. But we're now climbing back up over 40,000 tonnes, and we'd expect that to continue to grow, particularly underpinned by the Hispanic population in the US, which again know how to eat the product. China, the great thing about China is it takes a lot of the lower valued frozen cuts, particularly breast and flat meat. And again, you can just see the growth there since the turn of 2001, 2002. They're now taking that in what they used to take in 1 year, they're taking that in 1 month. So we'd expect that to grow to up over 40,000 tonnes next year, and that's on top of some significant mutton volumes they also take. The EU market, and I'll just finish off on a bit of a key point I want to highlight here, is that Australia's access to the EU market, which is probably the largest importing lamb market in the world, is very restricted due to quotas and tariffs into that market. And we constantly meet our full requirements into there, and we would expect to do so at around 12 to 13,000 tonnes of lamb in 2013. But it's a fraction of what our main competitor in New Zealand does. So New Zealand has over 225,000 tonnes access into Europe. So when we go to Australia and we look at our big three markets, almost 70% of Australia's lamb exports go to three destinations: the US, the Middle East and China. Now, for those with knowledge of the beef industry, that is more as a percentage of exports and goes to the big three for the beef markets, which is the US, Japan and Korea. So certainly we have three big markets destinations now that are taking the lion's share of our product, but we expect that to continue, and certainly they take a wide variety of product. When we have a look at our main competitor in New Zealand, they've had a big shift in where their product goes. Now, traditionally, they have relied very heavily on the EU market. As I said, they have a fantastic access in there of 225,000 tonnes. But even how lucrative that European market is, they are pulling product away from it and sending it towards the big three markets again of US, China and the Middle East. Just as last year, they crossed over for the first time with more product going there. Now, singularly, Europe is still their largest market, but they continue to put more product into China and the Middle East, which is additionally creating competition for us. And the negative side for us, if you like, is that we can't go and fill in some shortfall for Europe because we just don't have the access or the volume or the requirements to get into that market. So it's worth pointing out that not only is Australian product into particularly China increasing in the Middle East, so is New Zealand product, and the competition between the two of us, like in most things, remains pretty fierce. Just quickly finishing up on live sheep exports, we expect them to increase over the next, by 2020. Supply is going to be the big issue here, particularly out of Western Australia, and we'd expect to see more boats coming into South Australia and Victoria in coming years just to be able to find the available supplies. But certainly market access improvements in the last probably 6 to 12 months should see demand for live sheep improve. It's really going to be a question of where are those sheep going to be found, particularly if we have seasonal conditions that enable producers to hold on to numbers, but also an intention to rebuild, strong land prices. It's really going to be a quite interesting event to see whether the live shippers can pull the volumes they need to meet this Middle East demand. So in conclusion, I think I'm spot on time here for once. I'll wrap up by saying we do think lamb numbers will be tighter in the second half of this year, but just remember how high last year was, so overall numbers will still be quite good. This seasonal conditions, this next 3 to 4 months is going to be crucial for the next 12 months. El Nino or not El Nino, hopefully they continue to revise back their forecast and it ends up being a very good spring. We think overall price pressure will remain and prices will remain above average, above the long-term average, particularly if those seasonal conditions remain positive. Demand is very good. I mean, it's always very dangerous to talk about just how good demand conditions are and that it's difficult to see any issues. but certainly we've been helped out recently by declining New Zealand volumes. And again, remember in New Zealand, they continue to go away from sheep. They continue to go towards dairying, which over the long term will help the demand for Australian product. And the other thing is, as we export more product, that movement of the Australian dollar becomes more and more crucial for the lamb industry. I'm hoping the pundits are right in saying it'll fall by the end of the year. It's been pretty stubborn as of late. So I'll leave it there. Rob, and throw to you, mate.
Thanks very much, Tim. I'll try and just going to move this slide now. And Jenny Ann, you might need to help me with moving the slide. Is that the top cursor?
The right-hand arrow. Do you want me to move them across?
Got it. Thank you. Sorry, a little bit technically under pressure here, but I've been at Sheep Pension, so I've been surrounded by Sheep Pension at Hamilton, so I've been surrounded by people who are interested in sheep and all things woolly and meaty. So that's invigorated me. But thanks very much for coming along and welcome, and thank you to Tim for giving us that background. I'm going to try and build on what Tim said. So the first thing I wanted to mention was looking at, and what we're doing here is looking at what's happened in the market to give us a pointer for what's ahead. So ABS slaughter numbers, as you can see in Figure 1, show that 2014 levels up until May virtually unchanged in comparison to 2013, and still, as Tim said, making record levels. But the slaughter numbers generally tend to bottom out in June and July on average. Usually that's the case. This year's supply hasn't contracted as expected in winter on the back of the deteriorating seasonal conditions since April, May, sustained high prices, which have been enticing sales out into the market, and some concern about El Nino and the possible intense supply flush that might come in the spring, causing people to make earlier sales decisions. So in Figure 2, you can see that the East Coast lamb slaughter on average is the grey line. And let me just see the grey line where I've put my cursor there is the average of the last 5 years. The green line is what was happening last year, and the red is this year. So up until now, we've pretty much followed 2013 in terms of supply, but there's been a real spike against the normal supply pattern in the last month. So we still think that slaughter numbers are going to fall below year-ago levels from August onwards, but they'll probably remain above the 5-year average. Last year, slaughter numbers continued to fall into the second week of August, and then the numbers started to recover. This year, lamb turn-off seems to have bottomed in early to mid-July, and that's more than a month earlier. So that'll have impacts. Moving on to the where this is all coming from, mainly saleyard throughput still on their way down in Victoria and South Australia, but it's rising steadily in New South Wales. The New South Wales numbers have been what's really been driving this increase in availability for processors. Last week, you can see right at the end of that, there was a correction in those numbers, a pretty serious correction. And the contraction in yardings last week suggests that producers could be starting to withdraw numbers from sales after these recent price falls. Even so, average New South Wales yardings are 12% higher year on year this July than they were last July. We haven't shown Victoria and South Australia there, but they're pretty much just slightly below a year ago and below the 5-year average since June. WA yardings are moving along very similarly to 2013, and they had a big fall in supply in July. Looking at the prices, you can see that lamb and mutton's a similar story, but we're talking about lamb here. Lamb prices rallied strongly through February and March, and despite similar supply levels to 2013 until June, the average Eastern States trade lamb indicator prices for the first 6 months of the year have been 33% higher than in 2013. Now, this suggests there's a strong, the demand is stronger, and of course we've got to acknowledge it's helped year on year by a slightly lower Aussie dollar, and as Tim pointed out, by lower supplies from New Zealand. But I'll talk a little bit more about that supply-demand relationship in a couple of slides' times. Lamb prices are sustained at historically high levels for 4 months before they collapsed in July. And in July, we saw the Eastern States Lamb Indicator fall 100 cents or 17%, and it was 479 cents last Friday. The WA lamb prices, though, and looking at those over on Figure 2, have really been really firm and holding much firmer than the East. And we did mention with other reports that, you know, we need to watch what happens in WA because it seems to be a more normal supply pattern, and it can give us a pointer to what's ahead. So mainly what's happening is that supply is being brought forward, and that's impacting on the market. We think that processors weren't expecting numbers to be this high, and their prior concerns of a supply squeeze in winter have now pretty much disappeared. This next slide will show you just the price falling is 3 to 5 weeks earlier than in 2013, as I mentioned. So we had a long period of sustained high prices for lamb in the first part of this year, and they collapsed on the East Coast as the typical winter supply reduction didn't take place. And it's pretty much a pattern in whether you're looking at New South Wales, Victoria or South Australia. New South Wales yardings increasing steadily since May, while in Victoria and South Australia they're following a more traditional pattern. And with that supply brought forward, it begs the question, what could be the expectations for prices later in the spring and into 2015? So, as Tim mentioned, we've had higher supply, but we've also had higher prices. And I just want to spend a little bit of time on this, looking at a demand curve that Augusto has constructed for us out of our Sydney office. The demand has really changed significantly 3 times in recent times. So you can see in 2000 to 2004, the demand curve looks something like that. So as numbers increase, the price came down. And then we moved to another level in 2003 to 2008, where as numbers increased, the price came down by less. So in this chart, we've got average monthly slaughter numbers on the bottom and average price per kilogram on the vertical axis. Now that led us to the next phase, which has been 2008 and 2000 to 2013. And as Augusto commented this morning, it's unusual to see things lined up so well, but you can see the relationship there between price, or between numbers, firstly. So as numbers increased, the price deteriorated. As slaughter numbers fell, the price rallied. So that led us to predict last year that, according to that pattern, the average Eastern States Trade Lamb Indicator should have been around the 365 to 370 mark. In reality, what happened was that the average Eastern States Trade Lamb Indicator finished averaging 487. Now, that's 32% higher than the demand curve would suggest. Now, this is a pretty strong argument to say that, or it puts into perspective and numbers the suggestion that demand is improving. So, looking at that, tighter supply, we know supply is going to be slightly reduced this year compared to last year, and tighter supply in the second half of this year, that's 2014, and early 2015 should see the easterly averaging around 525 to 540 cents. The scenario with above seasonal conditions or above average seasonal conditions, tighter than expected supply, and if we happen to get a lower Aussie dollar, could see, in our view, the average price above the 550 cent mark. I'm sure we can have some questions about that as we get to the end of the presentation. Pretty similar pattern talking about mutton. Mutton markets have rallied strongly. Eastern Australian mutton, Western Australian mutton follows a similar pattern. There's slight seasonal differences, but you can see they follow along pretty well. And when you look at the New South Wales, Victoria and South Australian mutton markets, they all follow along pretty well, as you would expect. When we start to try and look at what's ahead for the mutton market, one of the ways we can do it is we can look at its relativity to, in this case, to lamb. So the first thing we did in Figure 1 was we looked at the sheep slaughter as a percentage of lambs. So last year, sheep slaughter was running at just above 40%. So just a few more than 40% of the sheep slaughtered were sheep, and a few less than 60% were lambs. So mutton markets track the lamb markets, yet the price relationships can vary according to supply relativities between them. So in the period of 2010 to 2012, sheep supply was comparatively tighter, and Tim mentioned that in his chart. All we're doing here is we're saying that as a percentage of the lamb market, it was just slightly above 30%, slightly below, and then at about 30%. So that's what we would consider to be a flock rebuilding. So after a strong sell-off, which we've seen as a high percentage in the last 2 years, sheep numbers will contract more than lambs as we enter a flock rebuilding phase. So we think mutton slaughter will fall back to around those 30% levels, and 30% of the lamb kill from 2015 onwards, which will see the spread in price move. So if we go have a look at Figure 2, we can see in those years where the sheep kill was low relative to lamb, so in 2010, 2011, 2012, the discount of mutton to lamb was in the range shown in those orange bars. Last year, when we had a much higher mutton kill, or sheep kill, the mutton price was at a bigger discount. So that leads us to the conclusion that we'll see when the sheep numbers pull back to the 30% of the kill, which we're expecting to happen this year, then the discount for mutton will improve and move back to somewhere between the 20-30% discount to lambs for next year. If seasonal conditions improve considerably, though, going forward, and one other factor, if wool prices recover somewhat, then these discounts can move towards the low 20% basis against lambs, as sheep retention would be very strong. One other thing is looking at the discounts to the Eastern States Trade Lamb Indicator. In this chart, you can, and we're looking here at using New South Wales mutton as the indicator here. But you can see in this chart there are a number of lines, and I'll just explain them briefly. So the faded grey is the range of prices, or a range of prices that the market tracks between. So we're talking here about mutton's discount to the trade lamb indicator. So at this point here, mutton is a 40% discount, and at this point here, mutton is a 50% discount to the lamb indicator. So on average, it ranges in that grey area. That's the we've got the 10-year average running through here. We've got last year's discount, and you can see that last year's discount was quite strong, and then settling down to be around about average. But when we look back at 2010, 2012, when we had that strong flock rebuilding, the discount really went much lower and out of the normal range, and that's that dotted line at the top there. So we're expecting that that's a possibility for now, and you can see that even now the mutton indicator is rallying up towards the lamb indicator. There's an upside in cattle markets on the back of improved seasonal conditions will definitely support higher mutton prices as well. We're looking at the next chart on Figure 2 and using as a sort of a resistance line of 150 cents. If the market moves above that 150 cent line, so that is that mutton is less than 150 cents discount to lamb, then we're definitely in a flock rebuilding phase, and that'll be a clear sign. At least at the moment, intentions seem high, especially if the weather allows it. So considering mutton discounts of 25 to 30% to the Eastern States Trade Lamb Indicator in 2014, 2015, and if we then use the estimates of the average lamb price around $5.25 to $5.50, the average mutton price for the next 12 months, season 2014, 2015, should be somewhere between $3.85 and 415 cents. Now that's a 45 to 50% higher than the prices we saw last year. So it's quite a bullish outlook for mutton based on those assumptions. That's the end of my presentation. Thank you very much. I will hand back to Jenny Ann, and Tim and I will field some questions.
Thanks, Rob. I've got a couple of questions, but just a call out to those on the line that if you do have questions, just put them into your chat box and we'll deal with them as they come through. Tim, the first question that we've received is, what has been the change in lambing percentage over the last 25 years, and does it mimic the increase in lambs slaughtered?
Yeah, great question. There's been a significant increase in lamb percentage, and I just don't have the figures on me. But I mean, you're going 25 years ago, you're going from a basic, merino flock where lambs weren't given that much, attention to now flocks where lamb is the main focus. So we watch it very closely. Our lamb survey gives us those results, and we can break them down by merino and other, which is mainly first and second cross. But certainly that increased lambing percentage is having a big impact on that slaughter, and you've only got to go back to the influence of how good a lambing year 12 was for the amount of lambs that came through in 13. I mean, it just showed up, and any time you have a lambing percentage, I think for that year might have been 6 to 10 percentage points higher than the previous year. It was a couple of million head of lamb that came through. So it does correspond, but also it corresponds to producers obviously putting in much more effort now that their lambs are worth much more money than 25 years ago.
Thanks, Tim. Just a bit of a follow-on. Sorry, I'm just reading some questions now. Tim, another one for Tim. Any idea on the number of lambs marked, the number for lambs marked 2013-14 versus 12-13?
I have all those numbers from the survey, and we also get the ABS numbers. I don't know if you're able to get the details of that question, Jenny Ann, but I could get the exact numbers there.
Yeah, the question's just been clarified. It was the percentage change. But what I might suggest is that I will get that data and we'll come back to the participant that posed that question.
Yeah. Right.
Another one for you, Tim. As lamb and mutton prices continue to rise, what are the implications for the merino ewe flock?
Yeah, look, I mean, Rob mentioned there at the end that, any recovery in the wool price might also see that merino ewe flock improve. Look, I still think there's a certain number of producers out there who are going to stick with wool, and they'll continue to bring those merinos through. But that demographic balance, if you like, the merinos coming through that'll provide numbers down the line is very important. We saw a big shift away there over the last probably between 2005 and 2010. But from our figures now, it seems to have held up well, or that merino ewe number continues to be relatively steady in the past few years.
Could I just add to that, Jenny Ann, please?
Sure.
I think it's a really good question, and it's a question we should be addressing carefully, or we should be researching, because the merino ewe flock is so important to the sheep flock in Australia. But my feeling is that the people who are going to make the switch to serious prime lamb mothers, that's been done. What's happening now, though, is that there are more and more merino producers looking to take advantage of this lamb demand and meat demand in general. And the way they're going about it in a lot of cases is they're joining some of their merino ewes to prime lambs, and but they have this they have a real affection to be able to maintain a self-replacing flock, and the merino does that. I think the other thing that was mentioned in the earlier question was about the lambing percentage. Once you start putting some prime lamb sires over some of your merino ewes, then it's very important not only to maintain those prime lambs you're breeding and get them as live lambs, but it's also important to concentrate on your merino lambs so that you can maintain your ewe flock with pure ewes mated to merinos. And that's an area that we will see more and more emphasis on, and certainly we can mimic some of the ideas and the progress that the New Zealanders have made.
Thanks, Rob. Another question we've got is, has there been a change in the type of lamb cuts, and this is probably directed to Tim, has there been a change in the type of lamb cuts, and has this contributed to an increase in sales?
Yeah, good question. You still get the same cuts off a lamb that you did 25 years ago, but I think what we've seen, and certainly focusing on the Australian market here, is that there has been a lot of product development go into providing or doing more with the existing cuts, but also doing more particularly with the secondary cuts. And you can see now the variety of lamb options you have, whether it's going into a butcher's or a supermarket, for dinner has increased significantly. And I think that all comes around consumers, are willing to pay more for lamb than they were several years ago because the quality and the eating quality of that product has improved from what could very well be, technically a lower valued cut of meat that's either been valued add or done more with through from the processing sector to make sure consumers look at that product and are willing to pay, more than chicken and pork for that product. So, the cuts, the development of the cuts and the quality of the cuts that has come in has improved significantly in the last decade in the Australian market, and I think that's what's really underpinned some of the success of the growth in what consumers are willing to pay for lamb in the Australian market.
Okay, thanks, Tim. Just in relation to our export markets, we've got a question around this. This is directed for Rob, I beg your pardon. And this is around the supply, demand versus price chart. The demand appears to be shifting out over the past 13 years or so, and we saw that in the chart. It coincides with the rise in lamb exports noted by Tim. Is the increased exports the cause of the shift in the demand curve, and are there any other reasons? Perhaps open that to you, Rob, first.
Yeah, look, it's. I think probably there are a lot of people who are looking at the reasons for this and finding and be able to give you a better answer than what perhaps we can. But we tend to look at the numbers to see whether or not that shift is sustained, if there is a shift in demand, to help us predict what the price is going to be next year. There's no doubt that, and I've shifted back to that slide. I presume everybody can see that slide now. There's no doubt that we've seen, when you look at the same numbers of lambs that are coming onto the market year on year, if we look at where I've got the cursor now, which was in 2008 to 2013, when I'm guessing that's about 1.7 million average monthly slaughter, and then you go back to the previous period, the price movement up is quite obvious. And we'll wait and see whether or not there's another level emerging, but I think there's a sound argument to be made that we will most likely go to a new level because, the conditions, as we've heard, are solid, demand solid, numbers or available lamb worldwide is not going to be in abundance, it's going to be less, and that generally means that we see markets pretty tight and the price is solid. I was at an ANZ briefing yesterday, and as many of you have seen, a lot of the banks are putting out a lot of statistics showing that the demand for agriculture product is looking, very bullish going forward. And you can't argue with those statistics; they're quite well founded. But the big question is, where will the supply come from? So we're at a time now where we're seeing, generally record prices for lamb, over the period, and we're seeing increasing demand, and yet we're seeing the Australian sheep flock at its lowest level ever, and we're seeing the New Zealand sheep flock at its lowest level ever. It's not the New Zealanders have managed to keep up their supply to some degree by higher lambings and a bit higher carcass weights, but overall the amount of meat available to be exported to the world is shrinking at a time when demand is rising. So if you're a betting person, you'd say now's the time to be owning sheep and lambs going forward, based on the sort of things we're seeing right now.
I might just add to that, Rob, and I think it's a very strong fundamental that underpins the Australian lamb industry. That if I'm in China or the Middle East or the US, there are two destinations that I can look for additional lamb from. It's either Australia or New Zealand. And those markets are looking for more product. It's nearly a question, is Australia and New Zealand going to be able to supply it?
Okay, so just to follow on around the comments around price, we've got a question. We've seen the lamb market drop about $1 a kilo the last couple of weeks. Are we looking for this to stabilise in the next month or fall lower? Perhaps, Rob, if you could address that, please.
Yeah, I will, and I think probably, Tim, you might have something to add at the end of it, but what we always know is that the lamb market does dip coming out of winter generally and into spring as supply starts to hit the market. So we knew that was going to happen. But what's changing is that what we just talked about is this increased demand and the slightly tighter numbers of sheep. Now, what we've seen, though, what surprised us was how many lambs came forward in July, and we think it not only surprised us, but it might have surprised the trade, and so the market has pulled back. But if those numbers, this is the interesting thing, I think, we're all predicting that the lamb price is going to be strong this year. If the increased supply continues for the next few weeks and depresses the market, maybe even further than where it is now, it's only, in our view, delaying the inevitable that the tighter supply that will then eventuate later on will actually make the market more volatile and, potentially, allow it to reach higher levels than what we're talking about now. So I feel for we've got, clients in the northern states, and it's frustrating when you go into market your lambs now and the market has come off almost inexplainably. But I think, and that's unfortunate for people selling now, but I think for the overall price of lambs this year, the average price, I don't think this early movement in markets will have much impact. I think it'll be well and truly compensated for later.
Okay, Rob. We've received another bit of a comment, and I just wonder whether either of you would like to comment on it. Is that supply and demand for feeder lambs is always hard to predict, and the buy-in price relative to the forward price is always risky for lot feeders. Can either of you got a comment on that at all?
I might comment on that first, Jenny. I think it's a really good question, and there's no doubt that you see a bit of a delay in the price of feeder lambs, usually season on season. So if you looked at feeder lamb prices last year prior to Christmas, and I know we were writing about it quite regularly, that they were extraordinarily good buying, and it turned out that way, that there were very good margins made. Now, what that usually means is that the next time they become available, which is coming into our spring now, a few more people are onto it, and they're not as attractive. And so if we do see a strong lamb market and slightly less numbers, then you'll also find that the processors will chew into those top range store lambs a bit more than what they did last year. There's no doubt that in November, December last year, there were a lot of lambs that could have went either way. Could have went to slaughter or could have went out to feed. With the demand that was there, they went to slaughter. So we should see that the feeders will probably have to pay a little bit more relative to the prime lamb market this year. Of course, the counter to that, or one other factor that influences that, is grain prices. And we're now seeing barley prices going back to, potentially around the $200 on farm, maybe even less in more remote areas. And that will lend people to have a look again if they've got, good barley crops, feed barley crops. They might then decide to try and add some value to that grain by trading some lambs, and of course that'll create extra demand. That sort of demand wasn't about last year in the spring because grain prices were much higher, and I think also people were more cautious about the seasonal conditions. Okay.
Tim, if you don't have any comment on that, I think we've just got time for one more question, and that's just probably addressed to both of you. And do either of you have any view on large corporate plays into sheep meat and wool production going forward? Tim, can I just start with you perhaps first? And if not, then move on to Rob.
Good question. I think there's been some large corporate plays already done into the land market. And I think, given the outlook, I think I'll continue to look at it quite favourably. I think it may be the cost of purchasing land to get in, which could be the issue. Rob?
I think there's no doubt we're going to see more corporate activity in the production side of agriculture. If you look at it now, most of the corporate activity, or a lot of the corporate activity, has been in the processing. So you look at the milk factories, you look at ADM trying to take over Grain Corp. Most of them have been operating in that area where it's sort of in the business area. The next move, I think, will be more into the production area. And, everybody's reading the same story and seeing that there's a bright outlook for it. Now, it's a bit disconcerting, I guess, if you're trying to buy the next door neighbour's farm, but if you're trying to sell the farm and they put together half a dozen farms and bring a corporate in, then that's pretty attractive too. But in terms of, there's no evidence yet that those corporate farms will be any more profitable, but we no doubt we need that sort of capital investment, and I guess people have got to aggregate their resources to put enough capital together to make a reasonable size investment. So I think we're going to see more of it. I don't have any other comment about it. I'm not against it, but it's not going to be the be-all and end-all either.
I might wrap that one up by reading the first paragraph of an article today on ABC Online saying China's largest red meat importer and Western Australian processor, V&V Walsh, yesterday signed a cooperative agreement which the parties say could deliver red meat sales worth $1 billion over time. I think that pretty well sums up that, there's people looking to lock in supply chains because they know it's going to get tight.
Okay, thanks very much, Tim and Rob. Now that concludes our webinar for today, and thanks very much for participating. We hope that you did find it valuable. Thanks very much, Tim, for taking the time to participate today. As always, we enjoy working with you and MLA, and we appreciate the effort that you put in for both this and the cattle webinar that we did a couple of weeks ago.
You're welcome.
On the right-hand side of your screen, you should be able to see a survey, and I'm just going to open that quickly now. If I could please get you to stay on the line and just fill that out. It'll only take you a minute. So as I mentioned, it gives us an opportunity just to continue to enhance what we do. So I'm just going to give you a minute to do that, please. They're coming through nicely, thank you. Just so you know, while you're finishing up those surveys, if you have any other feedback you'd like to provide, my contact details are on the screen, so please feel free to email me. We've recorded this webinar today, and I'll send you the link to the recording as soon as it becomes available. It's generally in the next day or so. And just another note that on the call today, we've got subscribers of Mecardo as well as non-subscribers. Any non-subscribers will set you up with a free 3-month trial to Mecardo, so you can start to have a look at more of this information and just see whether that's of interest to you. Our next webinar will be on the wool market outlook. At this stage, we still need to set a date for this, but it'll be around mid-September. So please email me if you'd like more information on this. I'm just going to leave that survey open for another 5 minutes or so, but that's all we need to do. So if you've completed your survey, thanks once again, and thanks very much for participating. Cheers.